Hello viewers, welcome to my channel. I'm Hashim Ali Khan. Now I'm going to start the first head of income, that is income from salary. So presently I'm giving the lectures on the subject income tax 1. Already I have uploaded 10 videos totally on Introduction to Income Tax Act 1961. I have explained in detail regarding the provisions of Income Tax Act, regarding what are the different categories of SSCs and what is the basic exemption limit, what are the different flat rate of tax slab system, and how to find out the residential status of an SSC, incidence of tax, agricultural income. All these things I have explained in the previous 10 videos. First 5 videos I have explained all the provisions. Next 5 videos I have explained you about the computation of tax liability, how to compute the tax liability of a person. So if you have watched those videos, definitely you got a command on the basics, fundamentals, and without understanding that introduction part, it will be difficult for you to understand this salary chapter, salary topic. So I suggest you, if you have not watched those videos, go to the playlist of my channel, select the subject Income Tax 1, Assessment Year 2021. Watch the earlier videos, get a good command, grasp, confidence on those topics, then come to this income from salary. So in the previous video, I have explained you Income Tax Act has given the procedure of how to compute the total income of a person. How to find out the total income. The Income Tax Act has classified the incomes under 5 heads. Income from salary, income from house property, profits and gains of business and profession, capital gain, income from other sources. First 4 heads are specific heads, and the 5th head is a residual head. That means first we have to check our income will fall any of the first head or not. If my income is not falling in any of the first 4 heads, it will be put to tax in the 5th head. Actually, the income tax motto is no income should go untaxed until and unless it is exempted under section 10. If it is exempted under section 10, it will not be taxed. But if it is not falling under section 10, it is not exempted, then definitely the income should fall in any one of the 5 heads. So for Income Tax Act has the procedure how to compute the income from salary, how to compute income from house property, how to compute profits and gains, like that. So in these videos, I am going to explain you what are the provisions of Income Tax Act regarding computation of income from salary. After this, we'll go to income from house property. First of all, for computing income from salary, first of all we should check whether the income is definitely income from salary or not. So Income Tax Act has given some clue, some characteristic features of the income that will be treated as income from salary. The main basic point is there should be employer-employee relationship, master-servant relationship between the payer of salary and the receiver of salary. If the relationship is that of employer and employee, then only this income will be treated as a salary income, taxable under that income from salary. Otherwise, if there is no relationship between master and servant, then the income received will not be taxable under that income from salary. There are many instances where we can see the wording is salary, but in reality there is no employer-employee relationship. Simple example I'll give you: the salary received by MPs and MLAs, the member of parliament, the member of state legislature. These elected persons, they will get the salary from the government. So Income Tax Act says when they receive the salary, that is not taxable under that income from salary because there is no employer-employee relationship. The member of parliament are not the employees of the government. So salary they receive is not taxable under their income from salary, it is taxable under income from other sources. Similarly, the salary received by a partner in a partnership firm, in the namesake it is salary, but it is not taxable under their income salary. It is taxable under their business and profession. So we have to check, we have to test whether there is a relationship between master and servant or not. If there is master and servant, if there is employer-employee relationship, then only the income will be treated as income from salary. Otherwise, we have to find out in which other head the income will fall. That is a test. Now, secondly, components of the term salary. I am explaining in brief about the main contents of this. Components of salary income. Broadly, we divide the salary income into 4 parts. The first part is salary, second allowances, third perquisites, fourth profit in lieu of salary. So these are the 4 components of the term salary income. What are those 4? Salary income is equal to salary plus allowances plus perquisite plus profit in lieu of salary. So first of all, I will explain you what are the items that will come under salary. After completing this part, we'll do some problems on this salary. Then we'll come to the next topic called allowances. I'll explain you what do you mean by allowance and what are the different types of allowance and what are the provisions given by Income Tax Act regarding that allowances. How much taxable, how much not taxable, exempted. All these things we'll discuss in allowances. We'll do the problems individually. Then we'll come to the next perquisite. In perquisite, we'll discuss the meaning of the term perquisite. Then how to find out the value of that perquisite. Then last one, profit in lieu of salary. The first topic is salary. So what are the items that may come under the head salary? Here I have given brief points. First, basic pay. The first prime part of the salary is the basic pay or basic salary. And basic pay or basic salary is fully taxable. This is the first item that may be taken under the head salary. So basic pay is fully taxable under the head salary. Under the head salary. Similarly, wages. We call it salary or wages. Normally, salary will be paid to employees, wages will be paid to workers. Whether it is salary or wages, it is fully taxable under the head salary. Third one, bonus. There are different types of bonus which are the extra amount which is given by the employer to the employee based on different things like for example, a productivity bonus or statutory bonus. So different types of bonus, contractual bonus. So any bonus given by the employer to the employee apart from salary, that is also taxable under the salary. Then gratuity. Gratuity is the amount which is paid at the time of retirement by the employer to the employee. Then regarding gratuity, a number of provisions are given by Income Tax Act. In the coming video, I will explain you in detail regarding gratuity taxability, how much it is taxable, how much it is not taxable. Here, if unexempted gratuity is there, it is taxable under that salary. If it is exempted, it will not be taken. For example, simple example I will give you, gratuity received by a government employee is exempted. So if a government employee retires from service, at the time of retirement, the government will pay him gratuity. That gratuity is not taxable. We will not take. Whereas other non-government employees, if gratuity is received, Income Tax Act has given the provision. Partly it is taxable, partly exempted. The unexempted part, we will take it under the salary. Next, pension. As long as the employee is in service, he will get salary. After completing the service period, after retirement, sometimes the employer will pay pension. So pension and salary are one and the same. Salary will be received during service. Pension will be received after retirement. Right? The employer will pay salary. Employer himself will pay the pension. So Income Tax Act says if a person receives a pension, it is taxable under that salary. Fully taxable. Then commission. Sometimes the employer will pay commission to the employee apart from salary. For example, a marketing manager is there in the company. The employer says, we will give you monthly 50,000 rupees salary. Apart from that, we'll give you 1% commission on sales conducted by you. So the employee is getting the salary and also is getting the commission. The commission is also taxable under that salary. Next comes excess of employer's contribution to RPF in excess of 12% of salary. So there is a provision of social savings. That means while during service period, the employer will contribute to employees' RPF, recognized provident fund. Later part of this topic, income from salary, I am going to discuss you what is RPF, what is provident fund, what is recognized provident fund. So in the RPF, the contribution will be made by the employee as well as by the employer. Both the employer and employee will contribute to RPF. So employee's contribution to RPF is his savings. For example, I am the employee in XYZ company. So in XYZ company there is a RPF, recognized provident fund. So accordingly, monthly 5% from my salary is deducted and deposited in RPF. Suppose my salary is 50,000. 10% of 50,000, 5,000. So employer, what he will do? He will deduct 5,000 from my salary and deposit it in RPF. I will get this amount of RPF at the time of retirement. But every month from my salary, 5,000 rupees are deducted and deposited in RPF. At the same time, employer will also contribute the amount in RPF. That is a contribution made by employer in RPF. That's an income. To me, to the employee, it is an income. Because in my account, employer is contributing. So Income Tax Act says it is your income. If the employer contributes up to 12% of your salary, it is exempted. If the employer contributes more than 12% of salary in your RPF account, then excess amount over 12%, that will be taxable under that salary. Next, interest on RPF over 9.5% fully taxable. Interest. When we deposit, when contribution is made by the employee and employer in RPF, the RPF will give interest. The RPF, recognized provident fund, will allow interest on the amount deposited, contributed. If the rate of interest is up to 9.5%, interest on RPF is exempted. If the interest credited in RPF is more than 9.5%, the excess will be fully taxable under the income from salary. Similarly, advance salary. Sometimes if an employee gets advance salary, that is also fully taxable. Then arrears of salary, if not taxed earlier, fully taxable. Arrear means due. If an employee has not received full 12 months salary, he has received only 10 months salary, 2 months salary is due but not received, that is called arrear of salary. Now if during the current year arrear of salary is received, that is also taxable under that salary, provided it is not taxed earlier. If it is not taxed earlier, now it is received, it will be taxable. Next one is leave encashment. Normally what will happen, according to the terms of employment, agreement of employment, the employer will give some leave to the employee. He can avail the leave. If he has not availed the leave will get accumulated and he can encash the leave. Example, monthly 2 leave days will be given. 2 leave days will be given by the employer monthly. So per annum, 12 2s are 24. So per annum 24 days leave are available to the employee given by the employer. Suppose if he has not availed those leave, he can encash the leave. That is according to the agreement of employment. Suppose a worker has availed only 10 days leave during the whole year. Out of 24, 10 days leave he has availed. 14 days leave he has not availed. So during the current year, suppose he has encashed that leave period. That encashment of leave salary is taxable under that salary. Next one is remuneration of teachers, lecturers from university, taxable under income from other sources. See here, teachers, lecturers, they are employees. Suppose I am the lecturer of XYZ college. So monthly I am getting the salary from my employer, from the college. So there is employer-employee relationship. Salary received by me is taxable under the income from salary. But apart from that, I will do the other work. Other work means I will set the question papers. I will value the answer sheets. I will make invigilation in the examination hall. These are the extra work I am giving to the college or university. For this, the college or university is paying me extra money. That is taxable under income from other sources, not under income from salary. Next one is income tax paid by the employee, income tax of the employee paid by the employer. Fully taxable. Sometimes according to the agreement, the employer agrees to pay the income tax of the employee. For example, I am the employee. XYZ company is the employer. So at the time of signing the agreement, joining the employment, there was a condition, there was a clause that income tax of the employee will be paid by the employer. Suppose per annum income tax comes to 40,000 rupees. 40,000 rupees is the income tax liability of the employee, and it is agreed to be paid by the employer. Employer has taken this obligation of paying the income tax of the employee. Income Tax Act says it is your income. It will be taxable under that salary because it is your obligation, but it is paid by the employer. It's an income for you. Next, remuneration for extra duties like overtime, working allowance, etc. Fully taxable. If a worker employee has done overtime work and he got some extra amount, that overtime work extra amount, that is also taxable under that salary. So these are the examples of those items which will fall under the head salary. Next, basic pay. Basic pay is the prime salary. First item under the head salary. First item under that salary is basic pay. What is basic pay? Basic pay is the prime salary, main salary, fundamental salary, basic salary. So this salary may change from year to year on account of increments. So normally salary will not be constant always. Every year the employer will make some increment in the salary. Increment in the salary. This example I have taken. For example, if the basic salary of an employee is 5,000 and increment is 200. It means after completing 1 year of service. For example, Mr. X entered into an agreement of employee with XYZ company. The company says your monthly salary is 5,000 and increment is 200. Means what? First year of service, every month he will get 5,000 rupees. So 5,000 rupees per month is the salary during the first year. As soon as the first year is completed, second year begins. There's an increment of 200 rupees. Increment of 200 rupees. So second year starts 5,200 monthly salary. Every month 5,200 he will get. Then 2 years completed. Next third year begins. Again 200 increment. 200 rupees increment. So 5,200 plus 200, 5,400. For 1 year, every month 5,400 he will get. Third year completed. Next year start, again 200. This is the increment in the salary. Sometimes what will happen in some organization, the basic pay may be graded form. Graded will be like this. Example, 11,400, 13,500, 15,800, 17,400. This is called graded pay scale. Graded pay scale. Now you should know what is the meaning of this graded pay scale. That means at the time of joining the service, he will get a monthly salary of 11,000 rupees. At the time of joining, every month 11,000, 11,000, 11,000, monthly 11,000. Up to what time? At the end of first year. First year, 12 months completed. Next year start. As soon as the next year starts, there is an increment of 400 rupees. Now second year the salary will be 11,400 per month. So every month 11,400 during the second year. Now third year begins. When third year begins, again 400 will be increased. So 11,400 plus 400, 11,800. Like this 400 rupees will increase up to 13,000. When it reaches 13,000, after 13,000 the increment will not be 400. The next step is 500. So after 13,000, the annual increment will be 500. 13,500 will be monthly. Then 13,500 plus 500, 14,000. Then 14,500 plus 500, 15,000. Up to 15,000 it will be. As soon as it reaches 15,000, the next increment will be 800. Then the monthly salary will be 15,800. Monthly 15,800. This will go up to 17,400. After 17,400, there is no increment. The increment in salary will stop. Then throughout the period, he will get monthly income of 11,400. No further increment are there. So here I have explained, in the first year of service, the basic pay starts with rupees 11,000 per month. After 1 year, after completing service, his monthly salary will be 11,400 till it reaches 13,000. After this, his increment will be 500 till it reaches 15,000. After this, his increment will be 800 till it reaches 17,400. Now this is the maximum limit. After this salary of 17,400, there will be no increment. This is called graded basic pay. right? We'll do some 4-5 problems on this graded basic pay. So next video I'm going to solve some problems on this salary part. After completing salary, I'll explain you about allowances, and then we'll do the problems on allowances. So if you are satisfied with my lecture, give a like to the video. Share the video in your groups, in your friend circle, so that more students can watch the video and increase their knowledge. And give your comments, feedback about my lectures. And lastly, don't forget to subscribe my channel. Okay, we'll continue the problems in the next video.